brainstorm any kind of property. You can think about this under the 1, 2, 3, 1. I think a lot. Any kind of property. Give me an example, everybody. Give me a brainstorm.
Just you have a company, you rent office, right?
Well, we talk about office already. We talk about land already. We talk about automobile already.
Equipment.
What else? Right, equipment. Right, if you're a doctor, you have equipment.
Yeah.
What else? What else? Let me ask you one question, okay? Because for next semester, we will have a financial accounting. Doesn't matter you learn accounting before yet. For accounting purposes, for balance sheet, 1, 2, 3, 1 will appear on which section on your balance sheet?
Assets.
Assets. What kind of assets?
Fixed assets.
Fixed assets. Okay, fixed assets. So I just want to connect different courses together. Okay. For those of you who have not taken the accounting yet, this is a good topic because even though we right now for tax purposes we say this is 1, 2, 3, 1 assets, and for next semester starting from June, we'll talk about this. Of course, we talk about a little bit from last week already, depreciation. During the year, you are using these assets. It could be, remember, it could be 3 years, 5 years, 7 years. Remember that? Right, we talk about this, right? And we talk about the section 179 last week. 179 is the option for small business. You may deduct this in one time. And if you deduct this at one time, your basis maybe becomes 0. So by the time you dispose, we talk about this, remember from last week? If you deduct in one time 179, and for next year you sold this property, you need to recapture. You need to recapture your depreciation back.
Rate of the recapture.
28%, I believe. Oh, by the way, very good questions, okay? He asked me what is the rate, what is the tax rate for recapture? Very good questions, and this is also another good topic for your final project. For online research, the title is what is tax rate for recapture? Usually, generally speaking, the tax rate is your original tax rate. Am I answering your questions? Say for example, before you depreciate, if your tax bracket is 35%, because you save 35%, so when you recapture back, you use the same tax rate. However, for real estate, it's flat, fixed at 28%. It's not easy, it's not that simple, okay, but I just give you a very basic guideline. The rate for recapture is whatever the original tax rate should be before you done your depreciation. So you just repay back whatever you save. However, for real estate, it's 28%. 28. So still, that I believe tax law encourage people to invest in the real estate. Okay. Very good questions. This is type 1. Type 2. 1, 2, 2, 1.